We are here in the afternoon to watch Jerome Powell. At least I believe Jerome Powell's speaking. I don't think they'd put someone else out there. So I think we got to talk about what's going on. Looks like they did go down to what was it? 4.75. 4.75 down from 5. So that'd be a 0.25 basis point cut, I believe. And the tenure is showing some downward direction here. We showed how the TLT was actually showing some holding of the reversal signal, so we will pay attention to that. Those still have yet to confirm. It's going to be interesting. It's going to be very interesting to see what happens. Make sure as you join in, we are liking this stream so more people can get in here and talk about it, and I'm going to get the Jerome Powell feed up right now. Sorry, I just came back from lunch. I wanted to be back here in case there was a problem. There was some kind of mix-up with the timing because of daylight savings time, and I got to change the timings on all my data drops because it's obviously off because it says it's supposed to be at 2:30 for me. Right now it's 1:30, and I was like, most of the time it happens at 1:30. So interesting, but that is happening in 16 seconds. So we got to get that up here. Which one should we watch? Maybe Bloomberg would be good. Trying to see what some people are talking about real quick. And then we are going to give a breakdown towards the end of this video, okay? We're going to do a breakdown. I might not because we're going live again today. I still have other stuff I got to get to. Oh, here we go. Okay, he's coming out now. So I want to make sure this is up for you guys. %25 basis point reduction.
Maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid. Inflation has eased substantially from a peak of 7% to 2.1% as of September. We are committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the FOMC decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by a 1/4 percentage point. We continue to be confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained, with inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 104,000 per month over the past 3 months. This figure would have been somewhat higher were it not for the effects of labor strikes and hurricanes on employment in October. Regarding the hurricanes, let me extend our sympathies to all the families, businesses, and communities who have been harmed by these devastating storms. The unemployment rate is notably higher than it was a year ago, but it has edged down over the past 3 months and remains low at 4.1% in October. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggest that conditions in the labor market are now less tight than just before the pandemic in 2019.
I'm getting a weird vibe.
The labor
right
market
now. I
is
don't know
not a
why.
source of significant inflationary pressures. Inflation has eased significantly over the past 2 years. Total PCE prices rose 2.1% over the 12 months ending in September, excluding the volatile food and energy categories. Core PCE prices rose 2.7%.
The VIX does have
Overall,
a 15-minute. We're
inflation
going
has
to test
moved much
1504.
closer to our 2% longer run goal, but core inflation remains somewhat elevated. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial
Tesla, a
markets.
little 15-minute divergence, nothing crazy.
Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we're attentive to the risks to both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4.5% to 4.75%. This further recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we move toward a more neutral stance over time. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing policy restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. We are not on any preset course. We will continue to make our decisions meeting by meeting. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation is not sustainably moving toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can move more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
I wonder if they'll ask him about tariffs and what he thinks.
Thank you. Given the expectation that the election outcome will produce policies that would meaningfully impact the U.S. economy next year, how is the committee taking these proposals into account for upcoming decisions, including potentially the next one in December? And can you give us any more sense of how proactive or reactive the Fed is prepared to be to changes in economic policies with the next administration?
Sure. So let me say that in the near term, the election will have no effects on our policy decisions. As you know, many things affect the economy, and anyone who writes down forecasts in their job will tell you that the economy is quite difficult to forecast looking out past the very near term. Here, we don't know what the timing and substance of any policy changes will be. We therefore don't know what the effects on the economy would be, specifically whether and to what extent those policies would matter for the achievement of our goal variables, maximum employment and price stability. We don't guess, we don't speculate, and we don't assume. Now, just in principle, it's possible that any administration's policies or policies put in place by Congress could have economic effects that over time that would matter for our pursuit of our dual mandate goals. So we, along with countless other factors, forecasts of those economic effects would be included in our models of the economy and would be taken into account through that channel.
Nick.
Chair Powell, Nick Timrose from the Wall Street Journal. Roughly 1 year ago, when the 10-year Treasury was flirting with 5% and 30-year mortgage rates were near 8%, you noted how higher borrowing costs, if they were sustained, could weigh on economic activity. Given that you've said you believe policy is restrictive and the Fed is now dialing back that restriction, are the growth risks presented by higher U.S. Treasury yields today any different from those you identified 1 year ago when inflation was still meaningfully above your target?
So I would just say this: we've watched the run up in bond rates, and it's nowhere near where it was, of course, a year ago. I guess the long bond rates are well below that level. So we're watching that. Things have been moving around, and we'll see where they settle. I think it's too early to really say where they settle. Ultimately, I'm sure we've all read these decompositions of what, and I certainly have, but it's not really our job to provide our specific decomposition. I will say, though, that it appears that the moves are not principally about higher inflation expectations. They're really about a sense of more likelihood of stronger growth and perhaps less in the way of downside risks. So that's what they're about. We do take financial conditions into account if they're persistent and if they're material. Then we'll certainly take them into account in our policy. But I would say we're not at that stage right now. It's just something that we're watching. And again, these things don't really have mainly to do with Fed policy, but to do with other factors in the economy.
If I could follow up, is the September SEP, are those rate projections still valid? Do they still seem relevant given where we are now? You get halfway through the cycle between the last set and the next set. I wouldn't want to comment one way or the other. Let's talk about the data we've gotten since the last meeting. So, in the main, the economic activity data have been stronger than expected. The NIPA revision was stronger. Certainly, the September employment report was stronger. The October report not stronger. Retail sales stronger. So overall, though, I think you take away a sense of some of the downside risks to economic activity having been diminished with the NIPA revisions in particular. And so overall, feeling good about economic activity. So I think we would factor that in. At the same
Dow
time,
starting to roll negative here.
we got
IWM
one
rolling down.
inflation report, which it wasn't terrible, but it was a little higher than expected. So I think really the question is December, and by December we'll have more data. I guess one more employment report, two more inflation reports, and lots of other data, and we'll make a decision as we get to December.
Gina Smilik from the New York Times. Thanks for taking our questions, Chair Powell.
Guilty,
when it comes to December, what will you be looking at
hour.
specifically as you try to make that decision? And then as of the Fed's economic projections in September, you had written down 4 quarter-point interest rate cuts in 2025. Do you still think that those are likely? Is that sort of the baseline outlook at this point, or has that shifted? And if it shifted at all, can you give a little bit of detail as to why?
I can't. We don't fill out an SEP, and I can't characterize one that wasn't filled out today. So I can't really speak for kind of exactly where the committee is. I will just say for December, we're going to be, again, at every meeting, we're going to be looking at the incoming data and how that affects the outlook. As you know, we're in the process of recalibrating from a fairly restrictive level at 5.33%. After today's move, we're down 75 basis points, and we're asking ourselves, is that where we need to be? That we're trying to steer between the risk of moving too quickly and perhaps undermining our progress on inflation, or moving too slowly and allowing the labor market to weaken too much. We're trying to be on a middle path where we can maintain the strength in the labor market while also enabling further progress on inflation. We think that's where we are, but that's the question we're going to be asking in September and in other meetings. And again, I can't really update you on the committee's thinking because we don't fill out an SEP at this meeting.
Yeah, totally appreciate that. I guess when it comes to your own thinking, do you think that a full percentage point of rate cuts in 2025 is a reasonable outlook?
Again, we're going to wait and see how things come in December. I mean, it's just. I would put it this way: we're on a path to a more neutral stance, and that's very much what we're on. That has not changed at all since September, and we're just going to have to see where the data lead us. We have, a whole 6 weeks of data to look at to make that decision in December. Obviously, I'm not ruling it out or in, but I would say, I would say that, again, we didn't update the SEP, so I'm not going to characterize, where the committee would be.
Howard.
Thanks, Howard Schneider with Reuters. I wondered if you could please elaborate and explain a little bit the two changes in the language of the statement here. In the first paragraph, when you say inflation has made progress, dropping the word further progress. And in the second paragraph, dropping the sentence that the committee had gained greater confidence that inflation was progressing towards its 2% goal. Is there any policy substance behind either of those changes in language? Is it meant to open the door to a December pause? Is it meant to communicate anything about the stickiness of core inflation in the last 3 months?
Volatility is trying to bounce
Not
from
really,
here.
no. So let me
See
tell
if
you
that continues.
what we were thinking. So the test of gaining further confidence was our test for the first rate cut, right? And so we met that test in September, and therefore we take that test out. If you leave it in, then it's new forward guidance. It's brand new forward guidance. What do you mean by it? Are you requiring yet further? We have to say yes or no at every meeting whether we've made further progress. The point is we have gained confidence that we're on a sustainable path down to 2%. So that I would tell you is what that's really all about. It's not meant to send a signal. Neither of those is meant to send a further signal. And saying further progress, it becomes a test. We don't want to be. We don't think it's a good time to be doing a lot of forward guidance. There's a fair amount of uncertainty in that. In what I've said, the path that we're on, we do know where the destination is, but we don't know the right pace, and we don't know exactly where the destination is. So the
This is not
point
a
is to
confident
find
answer.
that, to find the right pace and the right destination
sense.
as we go. And I think there's a fair amount of uncertainty about that. And you don't want to tie yourself up with guidance. You want to be able to make sensible decisions as you go.
Steve.
Steve Leisman, CNBC. Mr. Chairman, you talked about higher rates, perhaps from an expectation of higher growth. You didn't talk about it in terms of expectations of higher deficits. Is that something you think might be behind the recent rise in interest rates, and is that are rising deficits a concern to you?
So we don't comment on fiscal policy, and again, I don't have a lot more to say on what's driving bond yields. In terms of policy changes, though, let me give you a sense of how this works in the ordinary case. Let's say Congress is considering a rewrite of the tax laws. It doesn't matter what's in the content. So we would follow that. At a certain point, we'd think we see the outline, so we'd start to model it. And then we'd wait, and then at a certain point, the staff would brief the FOMC and say, these are the likely effects. There's lots and lots of literature on the effects of tax policy changes on various parts of the economy. So we'd try to get smart on that, and then the law actually passes. And you'd start to put it. You probably run an alternative simulation before that happens, just to keep people
Volatility has a
trying to
small
understand it.
divergence
Then
on
when it
the
actually
2-hour
passes,
here.
it goes
Very
into
small,
the model,
only on the RSI.
along with a million other things. So
See if
we
that fills
have a
up.
very large economy. Many things are affecting it at any given time. And a law change of some kind would go in there, but it would go in. But it would, it's a process that takes some time. Clearly, the legislative process takes a lot of time. And of course, the real question is not the effect of that law. It's all of the policy changes that are happening. What's the net effect? And the overall effect on the economy at any given time. So I think that's a process that takes a lot of time and that we go through all the time with every administration. Constantly, and this will be no different. But right now there's nothing to model right now. It's such an early stage. We don't know what the policies are, and once we know what they are, we won't have a sense of when they'll be implemented or all those sorts of things. So I think I would just say we're not doing that now, and all that will take time, and it will be very much regular order when we do that.
If I could just follow up on Nick's question. Are the current rates something you feel like you need to lean against in that they go against the direction of policy by adding restriction to the economy, or do you just take them as a given and perhaps a signal that you should do less?
Look, I just think the first question is how long will they be sustained? If you remember the 5% tenure, people were drawing massively important conclusions only to find, 3 weeks later,
Weird move from the volatility
tenure was
of
50 basis
volatility.
points lower.
Major
So,
spike. I'll show it to you guys in a
it's
moment.
material changes in financial conditions that last, that are persistent, that really matter. And we don't know that about these. What we've seen so far, we're watching it, we're reading, we're doing the decompositions and reading others, but right now it's not a major factor in how we're thinking about things.
Yeah, short Friday.
Thank you, Chris Rugaber at Associated Press.
Fishy, Matthew.
You mentioned the positive
Interesting.
economic data that we've seen since the September meeting,
It is interesting,
including
yes.
the revisions to things like savings, higher GDP growth. We saw stock market jump yesterday. That's renewed some of the questions about why do many cuts at all in this with this backdrop.
Good question.
So you're right. As I mentioned, and as you mentioned, the latest economic data have been strong, and that's, of course, a great thing and highly welcome. But, of course, our mandate is maximum employment and price stability, and we think that even with today's cut, policy is still restrictive. We understand it's not possible to say precisely how restrictive, but we feel that it is still restrictive. And if you look at our goal variables, the labor market has cooled a great deal from its overheated state of 2 years ago and is now essentially in balance. It is continuing to cool, albeit at a modest rate. And we don't need further cooling, we don't think, to achieve our inflation mandate. So that's the labor market. Inflation has moved down a great deal from its highs of 2 years ago, and we judge, as I mentioned, that it's on a sustainable path back to 2%. So the job's not done on inflation. But if you look at those two things, we judged in September that it was appropriate to begin to recalibrate our policy stance to reflect this progress, and today's decision is really another step in that process. Overall, as I mentioned, we believe that with an appropriate recalibration of our policy stance, we can maintain strength in the labor market even as our policy stance enables further progress toward our inflation goal.
Great. And just to follow up, what might cause you to pause rate cuts in December? What kind of economic data would lead you to that path? Thank you.
So we haven't, made any decision like that at all. But we're in the process, as I mentioned, of moving policy down, our stance down over time to more neutral level. And as a general matter, as we move ahead, we are prepared to adjust our assessments of the appropriate pace and destination as the outlook evolves. So, for example, if we were to see the labor market deteriorating, we'd be prepared to move more quickly. Alternatively, as we approach levels that are plausibly neutral or close to neutral, it may turn out to be appropriate to slow the pace at which we're dialing back restriction. Again, haven't made any decisions about that, but that's certainly a possibility. If you can think of it as similar to what we do with asset purchase, with asset runoff, with QT. So we reach a point where we slow the pace, much like an airplane reaching the airport slows down. And so we're thinking about it that way, but it's something that we're just beginning to think about.
Edward.
Thanks, Chair Powell. So with the noise in the jobs reports that we've seen, and you look at the Fed's favorite inflation, PCE inflation, overall it's 2.1%, very close to the Fed's target, but core inflation is 2.7%, and it's been that way since July. So why doesn't this data give fuel to a rate pause for this meeting?
Well, so I think if you look at the 3 and 6 month, you're quoting the 12-month. So
Yes.
we look at all of them, right? But if you look at the 3 and 6
We
month
have
core
11
PCE,
stocks
you'll see they're around
outside or
2.3%.
testing a
So we
weekly
look at all
expected
of them,
move right
and
now.
we also look at 12 as well. But what it's telling us is that we really have
And
made
Apple's starting
significant
to
progress,
participate.
and we expect there to be bumps. For example, the last 3 months of last year, the core PCE readings were very, very low, probably unsustainably low. So that's why forecasts generally see a couple of upticks toward the end of the year. On the other hand, the January reading certainly looks like an example of residual seasonality, so that we saw last year. So when that falls out of the 12-month calculation in February, we should see a thing down. So it'll literally be a bump up and then down.
Yes, Alex.
We understand
Yes.
that. Overall,
you see the progress on inflation, and you also look at the economy and you say, what is the inflation story now? Where's it coming from? So I point to a couple of things. One is the
Maybe, Jay.
non-housing services and goods, which together make up 80% of the core PCE index, are back to the levels they were at the last time we had sustained 2% inflation, which happens to be in the early 2000s for a period of 5, 6, 7 years. So they're back to that level. What's not is housing services. So let's talk about housing services. Housing services is higher. What's going on there is, market rents, newly signed leases are experiencing very low inflation. And what's happening is older, leases that are turning over are taking several years to catch up to where market leases are, market rent leases are. So that's just a catch-up problem. It's not really reflecting current inflationary pressures. It's reflecting past inflationary pressures. So that's one thing. The other thing is I'd say look at the labor market, not a source of inflationary pressures. Where's it coming from? It's not a very tight economy. What is the story about inflation? You see that catch-up inflation also in insurance and several other areas. So you're seeing, we're not declaring victory, obviously, but we feel like the story is very consistent with inflation continuing to come down on a bumpy path over the next couple of years and settling around 2%. That story is intact, and it won't be one or two really good data months or bad data months aren't going to really change the pattern at this point now that we're this far into the process.
So you're quickly trying to get to
you just
that
brag
neutral
about
rate that you see,
insurance
or
rates?
do you foresee that you have some time to get there?
Nothing in the economic data suggests that the committee has any need to be in a hurry to get there. We are seeing strong economic activity. We are seeing ongoing strength in the labor market. We're watching that carefully, but we do see maintaining strength there. And so we think that the right way to find neutral, if you will, is carefully, patiently. Again, that's not meant to have a specific meaning, other than to the extent the economy remains strong, we have the ability to take advantage of that as we try to navigate that middle path
You're
between
getting
the two risks.
do not worry, everything's okay, I promise kind of talk here.
Hi, Chair Powell. Craig Torres from Bloomberg. 2 questions today. Did you learn anything about what Americans think about the economy from the election results? First question. Second question. I want to talk about some labor market indicators, and I do so with great respect for your attentiveness to the maximum employment side of the mandate, Chair Powell. So the unemployment rate has been at 4% or higher for 6 months. One of the broadest measures of unemployment is up about 0.5 point from a year ago. Compensation gains are sliding back. The quits rate, a signal of labor market dynamism, has been heading down to that bad neighborhood of the 20 teens. So you have put a marker at Jackson Hole saying any further cooling is unwelcome. It is cooling generally a little bit further. So at what point do we reach what you would describe as a shortfall from maximum employment? Thank you.
Sure. So on your first question, I'm not going to talk about anything that relates directly or indirectly to the election. On the second one, this is the great question, and it's the one we think about all the time. So I'll just say a couple things. There's nothing really surprising here. What we know is that the unemployment rate is low. We also know that it's moved up significantly from a year or so ago. So we've seen a big change upward in unemployment. Sometimes that has meant bad things. So far, it doesn't appear to be. It appears that I wouldn't say that the labor market has fully stabilized, because I do think it's continuing to very gradually cool. But it seems to be in a good place, and our policy, of course, is designed to keep it in that good place, to maintain the strength in the labor market while also enabling further progress on inflation. You mentioned a bunch of indicators, and you're right. The openings to unemployment rate is back to a normal level. I would characterize it more broadly as normalizing. You mentioned wages. Wages are still running just a bit above where they would need to be consistent with 2% inflation, unless productivity is going to remain at this high level. If we see productivity, more sustainably at these high levels, then that would sustain higher wage gains. So I would say, in fact, you can say it the other way, that wage increases are now consistent with 2% inflation given current productivity readings. But of course, the lore on productivity readings is whenever you see high readings, you should assume they're going to revert pretty quickly to the longer-term trend. That has always been the case for 50 years. But it may be that we're now 5 years. If you look at the NIPA revisions that came out a month ago, we're 5 years into a nice set of productivity readings, which are sustained and very healthy. But overall, it's a good labor market. We could talk about 20 different data series. We'll be looking at all of them, of course. We don't want the labor market to soften much from here. We don't think we need that to happen to get inflation back to 2%.
Victoria. Hi, Victoria Guida with Politico. Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
Oh, he's pissed about this, dude.
Michael McKee from Bloomberg Radio and Television. You talk a lot about what the data are telling you and how you are dependent on the data.
Greg.
But in terms of forward-looking assessments of the economy, what are you hearing from CEOs or other officials around the country? What did you hear today from the regional bank presidents about what companies and consumers think about where the economy is going from here rather than looking backwards? And does that match up with what your forecasts have been and what you think the appropriate policy path should be?
So it's hard to characterize a really interesting set of discussions we had, and of course you'll see them in the minutes in 3 weeks. But I would say this: I think the comments from our Reserve Bank colleagues and from the CEOs that they talk to are pretty constructive on the economy right now. Pretty constructive, feeling that the labor market is back to normal, to the point where it's no longer that much a discussion topic in their worlds, whereas 2 years ago it was all they were talking about. So they feel like the labor market's in balance. People feel good about where the economy is. Demand is obviously pretty strong, and you're seeing 2.8% growth in the third quarter estimated, maybe the year's 2.5%. This is a strong economy. It's actually remarkable how well the U.S. economy has been performing with strong growth, a strong labor market, inflation coming down. We're really performing better than any of our global peers, and I think that is reflected in what you hear from what I hear people hear from CEOs. I don't get to talk to a lot of CEOs in my job, but I hear what others summarize from those, and of course I hear the Reserve Bank presidents do a lot of that, and it's pretty constructive overall. Now, that's not to say there are areas of caution and things like that, but ultimately, overall, pretty positive.
Well, to follow up, the areas of caution, if there were black clouds on the horizon that you identified as something you're watching, what would they be?
I think it's things like clearly geopolitical risks around the world are elevated.
We play the signals,
and just as clearly, they've had relatively little effect on the U.S. economy. Now, that can change through the price of oil or otherwise, but people talk about those as something that's on the horizon all the time. But ultimately, if you look at the U.S. economy, its performance has been very good, and that's what we hear from business people, and expectation that will continue. If anything, people feel next year. I've heard this from several people that next year could even be stronger than this year.
I'm gonna look at Oxy on that other chart over here, because that was a cool looking one, man. That's perfect setup.
Hi, it's Andrew Ackerman with the Washington Post. I just wanted to follow up on the discussion earlier on fiscal policy. Your predecessors, Greenspan and Volcker, spoke up loudly when they thought large budget deficits endangered economic or financial stability. Will you do that too? And right now we're in a period of full employment. We have large budget deficits and debt at historic highs that are rising. Is that something you'd speak out against?
So, I have said
Jay.
many times,
That's cool.
no more, no less than what the predecessors you mentioned have said. And what that is that the U.S. federal government's fiscal policy is on an unsustainable path. The level of our debt relative to the economy is not unsustainable. The path is unsustainable. And we see that in, you've got a very large deficit you're at full employment, and that's expected to continue. So it's important that we, that to be dealt with. It is ultimately a threat to the economy. Now, I can say that. I don't have oversight. We don't have oversight over fiscal policy. I've said it on many occasions, just said it again.
Okay, thank you.
23 points away from
I guess
hitting
the other question is,
6,000.
to follow up on Victoria's question, do you believe that the president has the power to fire or demote you, and has the Fed determined the legality of a president demoting at will any of the other governors with leadership positions?
Not permitted under the law.
Not what?
Not permitted under the law.
Thank you.
Oh, man, he's pissed.
Courtney Brown from Axios. In response to Howard's question, you said it wasn't an ideal time to give forward guidance because of the economic uncertainties. Can you lay out what some of those uncertainties are and whether or not it includes some of the proposals that the president-elect has put out on the campaign trail? Tariffs, for instance?
No,
Yes,
I was
tariffs.
not
Ask
referring
about
to the new administration's policies at all, nor will I today. So I
Yeah, that would give us too much of a
saying
hint.
Is, as we look ahead, we know, and I mentioned this in my statement, that the risks are two-sided. I guess I should start by saying that we think that the economy and we think our policy are both in a very good place, a very good place.
Awesome. The
And,
Americanism.
But as you look forward, you say, what are the risks? And one risk is that we would move too quickly and find ourselves having moved too quickly, and inflation comes back, and we lost our chance to get inflation back to 2%. So we have to avoid that risk. And to avoid that risk, that means you want to move carefully. The other risk is that we move too slowly, and that we allow the labor market to weaken too much and do unnecessary damage to the labor market and to people's working lives. That says don't get behind the curve. So these two things are the two risks that we have to manage, and so we're in the middle there. We try to be in the middle and deal with manage both of those. Again, the idea is to support the strength we have in the labor market and in the economy, but also with somewhat less restrictive but still restrictive policy, enable further progress toward our 2% inflation goal. This is a thing where we're meeting by meeting, we're going to be making our assessment of what the right path is. It's not as important. The precise timing of these things is not as important as the overall arc of them. And the arc of them is to move from where we are now to a sense of a more neutral policy. We don't know exactly where that is. We only know it by its works. We're pretty sure it's below where we are now. But as we move further, there will be more uncertainty about where that is, and we're going to move carefully as this goes on, so that we can increase the chances that we will get it right.
Simon.
Thank you, Chair Powell. Simon Rabinovich with The Economist. I know you don't want to share your decomposition of bond yields, but if you look at the break-evens, it is clear that longer-term inflation expectations do seem to have risen, up at about 2.5%, for example, on the 5-year. That's up half a point from when you cut in September. Do you have any concern at all that longer-term inflation expectations are de-anchoring, or put another way, are anchoring at a slightly higher level? Thanks.
So we would be concerned if we thought we saw longer-term inflation expectations anchoring at a higher level. That's not what we're seeing. We're still seeing, between surveys and market readings, broadly consistent with. I looked at the 5-year earlier today, and it's probably moved, but it's just not. It's kind of right where it's been, and also it's pretty close to consistent with 2% PCE inflation. So that's been a traditional one that we look at a lot. But overall, expectations seem to be and really have throughout this in a place that's consistent with 2% inflation. But you're right to say we watch that very carefully, and we will not allow inflation expectations to drift upward. But that's really why we reacted so sharply back in 2022 was to avoid that.
Kelly.
Hi, Chair Powell. Kelly O'Grady, CBS News. We just talked about what you've heard from business leaders on the economy, but many average Americans are still not feeling the strength of the economy in their wallets. So what's your message to them on when they might expect relief?
So you're right that we say the economy is performing well, and it is, but we also know that people are still feeling the effects of high prices, for example. And the world went through a global inflation shock, and inflation went up everywhere, and it stays with you because the price level doesn't come back down. So what that takes is it takes some years of real wage gains for people to feel better. And that's what we're trying to create, and I think we're well on the road to creating that. Inflation has come way down. The economy is still strong here. Wages are moving up, but at a sustainable level. So it's just I think what needs to happen is happening, and for the most part has happened. But it'll be some time before people regain their confidence and feel that. And we don't tell people how to feel about the economy. We completely respect what they're feeling. Those feelings are true. They're accurate. We don't question them. We respect them.
And just a
Well,
quick
you just said the
follow-up,
economy,
President-elect
GDP
Trump has
has
been
nothing to do
critical
with the
of your
average
performance.
American.
Any concern about his influence on the Fed's independence?
At least in this environment.
I'm not going to get into any of the political things here today, but thank you.
Nancy.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. What is your plan if we start to see stagflation?
Well, so that's the whole plan is not to have stagflation, so we don't have to deal with it. So that is actually our plan. It's of course a very difficult thing because anything you do with interest rates will hurt one side or the other, either the inflation mandate or the employment mandate. I would just say that we've been able to see inflation come down a whole lot, much closer to our goal, without the kind of sharp increase in unemployment that has often accompanied programs of disinflation. So, knock on wood, we've gotten this far without seeing a real weakening in the labor market, and we believe we can complete the inflation task while also keeping the labor market strong, and that, of course, is exactly what we're trying to do.
Can you rule out an interest rate hike next year?
No, I wouldn't rule anything out or in that far away, but that's certainly not our plan. I mean, our baseline expectation is that we'll continue to move gradually down towards neutral, that the economy will continue to grow at a healthy clip, and that the labor market will remain strong. If you look at our that will not change from the September SEP. That is our baseline forecast, and short of some exogenous event, that will continue to be our forecast for the foreseeable future. So, but ultimately, we're not in a world where we can afford to rule things out a full year in advance. There's just too much uncertainty in what we do.
Let's go to Jean for the last question.
All right, last question. We'll talk about something with stagflation.
Hi, Chair Powell. Jean Young with MNI Market News. I wanted to go back to a comment that you had made about Americans being quite unhappy about the cumulative price level rises over the past few years, even though now inflation is back on a path to 2%. Would it be appropriate for the Fed to undershoot for a while on its inflation goal under the average inflation targeting regime so people have a chance to catch up?
No, that's not the way our framework works. We're aiming for inflation at 2%. We did not think it would be appropriate to deliberately undershoot. And part of the problem there is that low inflation can be a problem too. In a way,
it's holding,
but that's not part of our framework, and it's not something we're going to be looking at in our framework review. Thank you very much.
Really interesting statement at the end there. Okay, really interesting statement at the end there, saying, and that is a good question. And I think the question was overall saying, like, would you let it go below 2%? And I think that's a very interesting question. You notice he shuts it down right away. And then a question a couple before that was about, people are still hurting from these things. You keep saying the economy is good in this, but a lot of people in America aren't participating in that good feeling. Most of America is not participating in that good feeling. So it's very interesting to me that he almost shuts down going below 2% very quickly. And that kind of connects me to my next point, which is I'm kind of glad someone brought up stagflation. Because if you look at what we're going through right now, and he's kind of saying it, but if you don't have stagflation in your brain, then you're not really going to think we could be in that environment. But I want you to really think about what's going on right now and how there actually probably is a high likelihood of stagflation with this move that we're even seeing right now, with these moves that we're seeing and what is overall happening across the board. So stagflation would overall be, okay, we see the economy still growing, but at a slower pace. Okay, so the economy is still growing. The economy is still growing right now, right? They keep tooting that horn. So let's just say the economy is still growing. And then after that, we have, something else with stagflation you got to pay attention to is unemployment. And he keeps talking about how the jobs market is good, jobs market is good, job market is good. We triggered the SOM rule. We have higher unemployment. So the second tick for stagflation is unemployment going higher. And we don't necessarily have extremely high rates of unemployment, but we do have a higher unemployment. And that is another tick for stagflation. So I wasn't really thinking about this, but it is good that she brought it up. And then we've still experienced higher prices over time. So I think that all of that together can put us in a high probability for stagflation, actually. And the fact that he is kind of scoffing things off when it comes to that is very interesting, especially when he kind of blows off the fact that someone asked, could we go below 2% to really allow other people to participate? And he's saying no. But at the same time, if you would go below 2%, you could trigger some kind of recession in that point. But going below 2% would be interesting. That would be a very interesting thing. I don't know why he's so scared of some negative readings here to, bring prices down. Because if we go to only 2% and we stick there, these prices are going to stick where they're at and increase by 2% per year if everything stays okay. So your best scenario for soft landing, I think, at this point is the economy slowly grows, unemployment slowly grows higher, and prices still rise and stay where they're at now and rise by 2%. And if you really put all that together in your brain, and then you think of that person asking about stagflation, would that meet that criteria at that point? So I want to hear what you guys think about that talk. I want to hear what you guys think about something that I was thinking of there with that statement. But you do have all those indications there actually at this moment, I think. But I don't think unemployment has broken through to really see people start to talk too much about stagflation. Did he decrease? He decreased 0.25, 25 basis points. But I just want to hear what you guys think. Let's see here. We did notice that apparently, the ES did hit 6,000. We are yet to see that in the SPX, throughout the day today, but I think that would be an interesting thing. Just so you are aware, some of the signals that we were seeing are going away. I'm going to look at my other charts here. And by the way, look at the tenure after this. It is just dropping. You're dropping below the 5. You're seeing this. You could cross over soon. So pop over to TLT. You got a 1.5% move, right? Right thinking, just wrong timing on this one, it seems, at the moment. But interesting that we see this massive move upward. He's saying the jobs market is strong. We're still growing. And yet he's going to cut rates there. I mean, we kind of figured he would cut rates still. But the more he cuts rates, and the more you think like, this is just going to, lower rates is going to stimulate more, isn't it? Right? Wouldn't that stimulate a little bit more? So very interesting. Very interesting. let's just follow the signals and see what's going to happen. Right now, you're seeing a big bullish run, and we're getting the signals from the volatility that says, hey, we could be in a squeeze right now. But one thing I wanted to show you guys, why I kind of popped that up in real time here, right? We're seeing some rejection divergence. You do see this divergence on the 2-hour. 1504 is a key level I pay attention to. That's one I have on my other charts. I just wanted to put it on these charts for you guys. 1504 is a key level I was paying attention to for this year. One thing to notice here, right when we get that data that they are cutting, look how the volatility of volatility absolutely spikes and then spikes right back down. Right back down. Someone gave this thing in volleyball a nice little pass here, nice little setup, and someone spiked it, right? So very interesting to see that. One thing to note about volatility as of right now is this bar right here took us down by 20%. What does that overall tell us? It tells us in the next 2 trading sessions, we have the chance for a down day in the SPY, and we're not getting a down day right now. That is an 85% chance, 15% of the time you just see that thing take off. And this was a dramatic move, so maybe this thing does just keep going down, and maybe the SPY does keep just going up. We do have a monthly expected move up there at 600 for the SPY. And for the SPX, let's go look at that real quick. Oh wait, that's a weekly. I was like, what the heck? For the SPX, you have 6,024.99. So it's pretty much 6,025. So for the SPX, you're looking at 6,025. We can maybe put that on this. Oh, whoops, that's not the right thing. That was not it. You guys, that wasn't it. Where'd that line go? All right, we're doing another line. I'll find that line later. 6,000. Okay, 6,025. I can't believe I just butchered that. Anyway, this is what we're looking at here. I don't know what number I typed, but it ain't the right one. So that's what you're looking at for the monthly expected move. Notice that you're hitting it. You're going really, really close to it early on in the month. We don't necessarily have reversal signals. The tenure is trying to find a bounce off of the 9-day moving average, but we are looking like we're going to curl down on a daily MACD for that. TLT trying to climb higher. Got to see if that 2-hour is going to confirm. The confirmation would be if a 2-hour can cross up on your MACD. That would be an overall confirmation. If this thing's going to turn back down, watch out for 30-minute. Okay, 30-minute is still by that center line. You're reacting up to the 5-day. See if that can turn down. That would be a negative thing for TLT. Maybe we need to go, right? Maybe the timing is still off and we need to go make that a strong base. Okay, because it's relatively controlled here. Relatively controlled. Alrighty, let's go back over to the SPY. Look at that, going up towards the daily expected move. So the Qs, this is where resistance can come in. This could just be profit taking at the end of the day. We don't want to read into it too much, but he's trying to cut those rates. I wonder what's going to go on next. You're sucking in the last of the retail traders and then rug pull. And I think this could buy time. Now, one thing that could be interesting is I kind of wish someone, and let me know if you think this is an interesting question, but a question I would ask is, what would the effect of deportations have on the labor market? What would the effect of illegal immigrants getting deported have on the labor market? I think that would be a very interesting question, because he's talking about he doesn't want cooling in the labor market. And we know that illegal immigrants do have a place in the labor market, and I wonder what he would have to say about that. Most likely, you know, a lot of these answers today, he was a little bit back and, you know, just kind of like a little bit talking a lot. A little bit talking a lot on those answers. Am I bearish right now? I don't really see any on the micro scale that makes me very bearish. I think this could continue for a little bit, right? That's what I would have to assume. You don't think so, Richard? I'd have to assume, I mean, we've been bullish ever since these signals down here. It's just we said, you know, watch out for the election. That can be kind of like an earnings, kind of a 50-50 flip. And hey, but the right signal, the right outcome, you see some crazy upside. So back to a little bit bullish on these yields, though. I mean, you just cut. Yeah, you can't really say that this is bearish. You would more so just be hoping for a pullback. I mean, the 2 hours way overbought, so no reversal signals here anymore. We had them up here. We had it right here. We got rid of that. We made the reversal signal. We got rid of it. So on the shorter time frames, right, bigger scale, different things. But that's just something there. With the yields falling, will money come out of bonds and into stocks? Well, weirdly enough, actually, because the yield is so high, some people actually might still get into bonds actually at this point. So if you look at bonds and you go, you know, they're coming out of them here. They've been coming out of them for a long time. They've been coming out of them for a long time. So this is actually, you know, now that you actually have this info, people might feel confident to go into yields knowing that they're going to continue to drop. Well, now you've seen them go up to a high point, and that can be something that people are interested in, right? That yield is pretty high up. That might look pretty juicy to some people. So weirdly enough, it could be the opposite of that. And this could be, and you notice that the Qs, right? The Qs have exceeded the high. So if we do something here, right, we exceed this high, what was the overall sentiment with this? Was a corrective move would most likely come if we exceed this high. More corrective, not necessarily crash worthy, unless Black Swan happens or something like that. So more so leaning towards this weekly. I think that this thing might turn down and then turn back up. And I think we probably bought ourselves some time into the end of the year with this move. That's my overall thinking right now. But this is a way euphoric move. It's kind of like, but it is enough to buy us that time to the end of the year. But the weird thing is, it's weird for him not to want to talk about policy from Trump because it's just so different. It's so different. And there is going to be that transition period where it probably will put a lot of the labor market under stress, in my opinion, but we'll see. Great stuff. I'm very glad that I sold volatility down here. My goodness. That would have been bad. Ended up being a good trade, though. We like it. I didn't have the balls. I didn't have the balls to take the call on this one. I wish I did. But at least it played out. Relatively, this is the kind of signal that can shoot you up. We were overall leaning towards retest, but notice what you do here where you probably would retest. We gap like way above it. Crazy move. He was nervous and edgy. His job days are numbered. Yeah, that kind of frustrated him a bit when they asked, you know, would you resign? Would he be able to fire you? He's like, no. I don't know though. I think he's got power everywhere now. I think they have. Someone have to look. Not the biggest political, how it actually functions kind of guy, but the House, Senate, and the presidency, do they have majority in all three, right? Create a labor shortages, especially in agriculture, construction, and food services. Yeah, construction would be massive too. Economic impact on demand for goods and services, impact businesses, wage increases. Yeah, all of that kind of makes sense, doesn't it? But that definitely would affect what they have to do. Like, that's why I think it's disingenuous to everyone listening for him not to at least mention, like, yeah, we're still keeping that in mind. At least say you're keeping it in mind. Like, you're keeping those things in mind or something. They're like, we have no idea what the policies they're going to implement are. It's like, well, he just spent the last year talking about them. So, yeah, I would like some insight, but is what it is. They usually don't give too further into the future insight there. TLT, watch for this 2 hour, see if that's able to confirm. Maybe we can see a little hint over here from, there you go, 4 hour has confirmed down there. We did hold the divergence points here for the RSI on the 10-year. That is suggesting that the 10-year is about to see a pretty good pullback on the daily scale. Where could that pull back to? No idea. But I think that could pull back to, if I had to guess, I would say something like that, 4.062. That's what I would say. And then we'll have to see from there. Volatility, the only thing I was paying attention to, I mentioned this on the 2-hour. Just the fact that this looks like it really wants to curl up. You do have some slight, it's very, very slight, guys. It's on the 30-minute, but it's kind of wonky on the 30-minute, so I don't like that. If I'm going to take a trade, I'm not going to say volatility's going to the roof here. But if we turn down those macro signals again, you might hear me on the weekend saying that, so I like my macro signals. One thing I was mentioning about Bitcoin here was some interesting things. I think this 2-hour really needs to pull back. I think it needs to pull back more than this. You're seeing these little divergence points on the 2-hour. When you open that up to like an hourly or something like that, what are you seeing? You're seeing this divergence point. So it's still very strong. It's still very strong, and this is something you more say, okay, this is still strong. We've done some good stuff, but if this rolls over, I have to be ready to react. Boeing is at a level where it could be basing out. It's showing some of those signals. They're showing all those signals. So Boeing here. Now, I don't want to do short time frames on this. I really don't. I just want to see if that daily turns up. You almost have daily divergence down here already, right? You almost have a flat little divergence there. You had the rejection divergence at this low. That's when we were talking about this. But I think the weekly scale is still the most important here, guys. Look how close that is to crossing. You're talking about the weekly scale being able to turn up. That would be a big deal. If the weekly scale turns up here, it means Boeing's coming in. Why would Boeing randomly see this big upward push if it comes to fruition? I mean, would it have anything to do with wars going on? And yeah, I think right now, Mark, all we should think about, by the way, and this is more just me seeing what you guys think, right? I want to know what you guys think. Do you think things could escalate and that would be the reason Boeing? Or is it just investors see this as a good price, right? But you do have weekly divergence here. You have some daily that potentially could be considered divergence, I would say. And if that weekly turns up, hey, you can start to turn up some big things. Let's look at the monthly scale. You can start to turn up that monthly, and that's saying, hey, I might go positive. I might break through, right? So is it a good, maybe, investment? Well, we got to see. If this weekly turns up, it suggests that the monthly can turn up, and then if the monthly turns up, that would suggest that this is the probable time for Boeing to be a good hold for 12 to 24 months if that monthly would cross up, and you're getting a sign of weakness on the weekly charts, which is nice to see before it happens. Gotta wait for confirmation. Especially on bigger time frames, you gotta wait for confirmation, but you do see how that is very, very close to seeing that confirmation. Profit taking soon would make a lot of sense. This move took a lot of people off guard, right? We caught the divergences, so we weren't too caught off guard. I think we were just caught off guard by, well, and we knew the daily expected moves the next day were massive, but you know, just that big ass gap up really is the thing that took me off guard, I would say. The big gap, right? I said in the video, hey, we could experience a gap most likely, but I didn't think that would be gap up to a daily expected move. That was wild. Big ass gap. That's like the biggest thigh gap I've ever seen. But at the end of this video, we are going to do a little main takeaway. I had to put off some stuff until tonight to do this live video, so there most likely won't be an update tonight. But if you want to join the Patreon to get the daily expected moves for tomorrow, notice we're hitting daily expected moves all the time now. The last couple days, one of them we used, right? Sat up here, and then now we see another gap up, and we just keep going to those levels, right? We're either using them as support or seeing us gradually break through them, or at least tagging them at the end of the day. So in the beginning of the day, we're either gapping above them or gradually pushing through. Yeah, big move out. And if they keep saying they're going to keep cutting, then technically these bond yields will look good for people, right? Uncertainty going forward, potentially with a new administration coming in. Will it all crash down with Christmas? all these holidays coming up, I would say it's more likely to see some sort of correction due to the TLT trade at this point, right? Doesn't the TLT repositioning now make even more sense? It kind of does to me. It's like, hey, we're going to keep cutting these yields. Okay, cool. Well, then we're going to invest in TLT. We're going to invest in bonds. And take some out of stocks, as that seems like, hey, this is a rapid upward move. We're about to hit 6,000, all that stuff. It seems to make a little bit of sense to me. It's not really proving in the reversal signals, though. As of right now, you're just squeezing, right? The MACD is blatantly turning down while your price action is going up. That is some squeezing, even though we do have a lower PCC right now, but it did spike up in these areas. This is where the low was, right? We could use the PCC and say, oh, people are really towards the put side and we are seeing a divergence. That's what really told us, hey, there could be some kind of move here. It was bigger than I expected, I will admit that. I thought there was potential for a retest, but as we gap above into this again, now we're back in that channel and we're probably creating a new run here. So unless this is a massive trap, I think we may be correct. And the one signal that this is going to continue, right? The squeeze continues is volatility turning down on the third, really confirming like, hey, there is more upside. Apple did start to participate. This is something that we were talking about, and we were talking about creating that cup and dipping back into the zone, right? Breaking through the zone, dipping back into it, turning back up. That's exactly what actually ended up happening. It's just one of the scenarios we pointed out, and that's why we point out multiple scenarios, and you can just react to whichever one's happening in front of you. Is this the best price action at this point? Not necessarily, in my opinion, but I do think you have a chance to go test these levels again for Apple. So no real weakness here for the 30-minute at this point. Close the presidential gap. Well, I think we have an opportunity to do that if we see the rotation into TLT, and that would be a solid trap setup too, to make this thing actually go higher. As the Qs do break through these levels, there's two things we need to take into consideration. One, are we going to experience a correction? That's number one. But two, we're outside of that annual expected move for 2024. This is as high up as the options market saw us getting in all of 2024. But this is such a bullish move that we can remain up here for a little bit of time. All right, we have no reversal signals in. We don't see that weakness in momentum. The momentum here is still strong on the shorter time frames. Is the momentum strong on the weekly? Well, we have room for the Qs to go higher. So you would suggest yes. That has not confirmed any divergences anymore. We got rid of the confirmation, so we'll take it as a blip right now, and we shifted the other direction. So that's going to be key because this has not curled down anymore. That's curling right back up. So that's a good thing that we got that 30-minute divergence on the SPY. That really helped us out. So when do we fill the gap? Well, I would say it's more so we need to make reversal signals right now to even talk about filling the gap. I mean, that's what I would overall be saying. We have a bunch of gaps here, but you can easily like now, tomorrow, let's see where that daily expected move is. If that daily expected move is here, and we do this in the morning, then we turn up. We could turn up next week, go up to this point, and then turn down. All right, we need to see if we get a hint from the shorter time frames. If it's not going to give us a hint, then we pay attention to weekly charts and daily charts, right? That's all we got to do. Because volatility is just remaining at that low level, back down towards 1504. High yield growth is building back a little bit here. Maybe that pulls in, right? We see that structure. There was one with good structure I was looking at on my other charts. AMC now down 6.4. This is why we pay attention to when that 30-minute crosses down. This is why we pay attention when divergence is there. This is divergence. You have flatness up here, right? For a double top, you have confirmed it. And that is overall saying the daily can roll over here. The daily can roll over here. So is the daily going to dip way down and just keep going? Or is the daily going to make some kind of divergence here? That would be interesting. Daily hasn't crossed yet, so we can pay attention to some point. Elliott Wave pointing to QQQ towards 520. Well, Elliott Wave then would make some sense because we've held this channel pretty well. We've seen some violations of the channel. When we do violate that channel, we see divergences pop up, and that's what led to this. We saw the lows outside of the monthly expected move, so we called bullishness. We called, because of NVIDIA here, bearishness. And then that was a move outside of a weekly or a monthly expected move, I believe, as well, maybe a weekly. And then this one here came outside of a monthly expected move, and we saw reversal signals here on the Qs. Bullishness, right? We're just paying attention to that weakness and momentum to see which way this is shifting. Now you can see we still have that weakness and momentum, but this is what I'm talking about right now. This could be another potential move to go like this, right? Because this is holding on the MACD, you're seeing that divergence, but this is crossing up right now. So if I'm saying, hey, the market's gonna tank tomorrow, well, that's always possible, but you're getting rid of these little divergence points that you made here. You're getting rid of those. Very interesting. So I think a correction would be good for the market right here, actually. That would be a good look, maybe. We have to look out for different signals now. The Qs are violating those areas, but 520 would make sense for this month. It would make sense because 520 for this month would lead you up to the top here. It would lead you up in the top of that channel. Good afternoon, Bernie. But Elias, yeah, thank you so much for bringing that up. Not a big Elliott Wave guy. I do watch, every once in a while, I'll look at some people that cover Elliott Wave just to see what they're thinking. But it seems like Elliott Wave to me is a lot of guessing, like, oh, is this that move or is that move not done yet, right? A little too much guessing in there for it. I'm just not good at it either, Elias, so. Right, I haven't looked into it enough. But if that move is there, then that would make sense for the month of November, and then we see something pull down. But we did take out this high, so I am leaning towards correction now. $2.3. See if that continues. Has not crossed over yet. Still got to treat it like a pullback. I would say 5 to 12% if you're talking about the SPY. Because these corrective moves, a lot of the time you'll see them at somewhere between 5 to 12%. A lot of the time it's like a 10%, 12% move down. But it could be short, so I would say anywhere from 5 to 12%. But from this area here, I would assume it's going to be more than 5%. Let's say we get there. Because 5% just brings you down into this pocket. Right into here. If you're really looking at it, you could probably go, oh, where was the last low? Okay, there it is. Let's say we stop there. All right. Maybe we go up towards 600 and then we start to see it. This would make some sense. There's your about 10% there. Longer time frame, more precise. Yeah, longer time frames obviously make Elliott Wave a little bit better, but to me, it's just the way they talk. A lot of the time, it seems like this could be the A, this could be the Z, this could be the A, but this could also continue, and A could be up here. And I'm like, that just doesn't help too much, I think, with at least finding a position. Now, paying attention to the last move, right? If you have the count and you're paying attention to the last move and you see those signals in here, then you could say, okay, now that has weakness. So I get that there's probably some benefits to it. Yeah, so 540 would lead you to pretty much that golden pocket. As far as correction goes, I think, and we'd have to look at the monthly expected moves right now because we're seeing a dramatic move early on in the month, right? So technically, by the end of this month, it would still make sense to end up towards 536. Isn't that crazy? It would still make sense to be down here because this move is pretty quick. You've moved all the way up to a daily almost a monthly expected move in what, a week? So now you have 3 weeks left in the month. So if you have 3 weeks worth of maybe some bouncing around, but some pulling down, right? Some correcting, then technically it would make sense. Do I think that happens all in 1 month? No, usually downturns are a lot more it's a lot different. There's always people trying to call that bottom, but we'll pay attention to the signals. If we're going to see this correct, then we're going to see good signals, okay? That's how we caught this. That's how we caught this, right? We're going to see good signals. A lot of the time on downturns, you see very obvious signals. That's why you notice this. Upticks, a lot of wonkiness. Upticks, a lot of wonkiness. Down moves, one curl up. Down moves, one curl up. So if it's a correction, we're probably going to see this drop down, see a 2-hour divergence, and then just be like, okay, that's the correction at that point. And then we just have to see how close to the center line that can get. So, interesting. All right, we still are hitting the daily expected move for the SPY. This is as high up as the market saw us going today. It says we should be pulling back, but we keep heading higher, getting that squeeze behavior. But I just thought this was interesting. VVIX absolutely popped when it first got that data. Then it just dropped immediately. I wonder if this is like, it's all within probably like a minute. It's not even, is it not going to be on the minute? Yeah, it's not even going to be on the minute here. There it is. It's on the 3-minute. So in maybe a minute or 3 minutes, you had an absolutely skyrocketing move for VVIX, and it immediately went right back down. That could be a blip in some way, but usually some pieces of data are what causes this. So some kind of order or something out there caused that. I'm not seeing it on volatility. Volatility, you do have the rejection divergence for the 30 minutes suggesting that the 2-hour is going to pop here. But that could be just that. That could just be that 85% chance for a down day in the SPY. And that could just be a consolidative day, right? That just makes volatility bounce and then we actually turn back down. So what I'd be watching for from volatility now is it seems we bought ourselves some time. What we need to pay attention to for the, I would say, correction at this point is if we make reversal signals on the 2-hour. I think that would be huge. And if the SPY can make that now in the near price action, because this violated all the divergences. Look at this. It violated all the divergence points here. All of them, well, except for the one way back here, but that's kind of elongated at this point. We can see that, boom, that was what we were paying attention to. Multiple point on the RSI. But this is a new move, so you can see another push higher even after a 2-hour pullback. So this could leak out for some time. Barring people just like hop into TLT. Trying. Let's see if anyone is trying to buy into AMC at the end of the day. Not too much. One thing is that breakdown area where we kind of cut that low, that consolidative low, was this area right by 437. So a reaction of 437 would make some sense. We really want to pay attention as this divergence has confirmed. If we're seeing the daily scale turn down, that's going to be a big sign that AMC is going down for a little while. GME still has earnings in December. Now this as well has the divergence right now. GameStop does have the divergence. It does have the potential that this is a major cup and handle, but this might be a cup and handle as well, that little minor one on the shorter time frames. The only thing that you're worried about is if this 2-hour does cross, that is divergence, and it is very freaking significant. So if you're not able to turn back up on this 2-hour, if this thing crosses down, that is, right? It's crossed up, so positivity most likely. But if this would turn down and this crosses, you gotta watch the daily and see if that turns down. If we start to cut this low, if you can hold up, hey, that's great. And then you can turn up, right? We can turn up into positive territory, but that divergence right there, very steep, very steep. The daily scale can start to roll from that. And maybe we're going to retest the lows in here, right? Maybe we're going to go all the way down towards 20 again. Interesting. But we were right in our thinking about AMC. They know that the volatility is higher up. They know implied volatility is there. Well, price predictions isn't necessarily me predicting it. Whenever I'm really predicting a price, right? Whenever I'm seeing, I don't know, let's use the Qs for a second, and we say, oh, we just curled up on the MACD, right? We just curled up on the MACD. Well, that leads me to believe, well, we gravitate towards monthly expected moves. So that does lead me to believe we do have higher up prices, right? So the times where I'm predicting a price, I'm not doing my own number. All right, if I give out a number somewhere that's on a white line, it's most of the time where I think some support or resistance or a key level could be, but I'm not really predicting it'll get there. When I'm predicting things, I'm more saying, I'm not predicting, I'm using the numbers that the options market is giving me, because I have more confidence in that than me just shouting out a random number because I see a block of price action there, right? If I wanted to, you could, people with POC and things like that, that's how they make those. They look at the blocks of where the most buyers, where the most sellers were, and that's how they do things. But Jeff, most of the time, I'm actually probably 99% of the time, if I'm predicting a price, right? So I said, hey, this 30-minute divergence here, hey, if it's not a retest, we can go up to the weekly expected move. Am I predicting the price of 504.94? No, I'm just having the options market tell me what's up. And then you could say, hey, if we're going to squeeze because volatility turned down, well, then we could end up all the way to the daily expected move today or the monthly expected move, right? It's a lot more beneficial to me to use something with data behind it than to just think something, if that makes sense. But we do cover these weekly ranges. We tell you what they are. We tell you how to calculate it for any stock in the course. That's why the course is very beneficial, is because it not only allows you to, hey, maybe join the Patreon if you don't want to do the work and that kind of thing. We give you a way to do it. We don't give you the exact way. I just give you a very simple way to do it, and I use my fun account to show you how to do it. You can do it on any platform probably, right? But I just learned how to calculate it. If you want to learn how to calculate it yourself, you can type in how to calculate an expected move. The calculation is up there. You know what I mean? But yeah, the course will tell you how to make that. It'll give you a slightly, they're good, I've used them before, slightly less accurate, right? They're usually kind of sucked in a little bit. But if you actually calculate it, they spread out just barely. So you get a more accurate reading of where that level that the options market is pricing in, how high or low you can go. So it's very beneficial. And then we talk about how to actually trade around those. So do we have trade setups around this daily expected move? Not necessarily. I mean, you have 15-minute divergence, but does that look like, 15-minute is not something I like to do. I just don't think there's much strength. The lower the time frame, the more crazy things you can see. That's why this 15-minute here, notice we got this turn up, turned right back down, turn up, turn down. It's like, that's really wonky. So if you just spread it out to a 30 and you see it very clean on a 30, and then you see that the Qs are making a higher low, you can say, oh, that is weakness in momentum. This could curl up for that retest. But guess what? During that retest, which was most likely coming, you get what is seen from the market as good news, right? Good news for US stocks, which means what do? You gap above the retest. Notice we gapped directly towards where we would retest right away in the morning. You didn't gap to here, go retest it and fade. You gapped to here. And that's kind of cool. That's what's cool about technicals sometimes, is when your drawings hold some weight, it kind of makes you more inclined to say, hey, I'm seeing things correctly. I'm drawing things out correctly. So if I wanted to play this, this easily could have went the other way, but if I wanted to play this, I would have been looking for a tag for that retest. But since we gapped above it, then I can look for, a daily or a weekly expected move. Maybe I sell some, take some runners, right? Have my risk out of it. Okay, now we went to another daily expected move. Now we have a 68% chance to do that, 85% chance for a down day tomorrow. Does that mean this has to do this? No. This could easily, the 30-minute turning down, it's very overbought, but we see 30 minutes overbought for a long time during squeezes. But it looks like we might see some profit taking. If that profit taking continues, we could use the weekly expected move for our upside to get up to 649. And then if we see that is when you want to start to go, ooh, the 2 hour can drop. That's what you want to do there. But if the 2 hour then drops, does it have divergence? No. So do we have that weakness we had just a few days ago? No. So if that 2 hours, let's say the 30-minute does this, 30-minute does this, and then the 2 hour crosses. Well, that means that the 2 hour is still going to be going up a little bit higher. Right? It might curl down for a second, not cross, curl back up, and then do that. Do we have reversal signals there? No. We would have a reversal signal on the next push, maybe. And that's a maybe, right? That's what I'm looking for this month now. If I see that, you're going to see me posting this all over Patreon. I'm going to be posting this all over Patreon and talking about it. And then talking about how far down that could maybe take us based on what the daily chart looks like as well. So that's what we'll be looking for. So a 30-minute pullback here is welcome, but we don't have reversal signals. Okay, so this could mean we bought ourselves some time to create that top again. Well, we did see a few things from North Korea. The funny part is, with the Trump presidency, everyone's saying, I don't know why they would say on Twitter that he's going to start World War III, which is something you have to be aware of because he was the most peaceful president in my lifetime. Well, what I need to understand is China actually messaged right away and was like, hey, we are interested in peace with the new administration. And I thought that was very interesting. Me and my buddy talked about it this morning because he kind of told me about it. At least that's what we see right now. You never know with those guys. They know you won't take BS. IWM started to pull down here. We will have daily expected moves, and maybe we're going to go up to 242.97. That was my target for 2024. That's crazy. I can't believe it might get there. That's actually great. When I was mapping this line out, I even remember forgetting about it because I mapped it out and it was so high up from where IWM was that I was just like, man, that's crazy. But I'm not even going to too much think about that. I'll follow the signals, and then now it's popping up, and I'm like, oh yeah, I did do that. Apple was starting to participate. Something good for Apple would be to retest this level, right? I think to retest that level, that can really gear you up for that move higher. But also, so if this 30-minute pullback, if that happens, and then we turn back up, that's good. That's very good for Apple. If the 2 hour crosses down into negative territory, that's bad. That's going to be bad, because this could all be some kind of consolidation to head down. Exxon Mobil. Well, you're kind of creating consolidation where you want it. You're kind of creating that consolidation where you want it, but it looks like it's kind of failing right now. Look at that thing failing a little bit. So you want to see a break above this level. You want to see that 30-minute able to curl up. Daily. Let's see on the MACD midline. Ooh, yeah, daily trying to cross up there. Some good wicks too. That's technically a positive bar. Technically, right here, you do have 2 of the 3 signals to take a swing trade. Oxy is the golden setup. We can check on that again, but Oxy is the golden setup. So Oxy yesterday said, hey, I have the golden setup, and I confirmed. Oxy just before that gave you a 2 hour divergence down here that confirmed. Oxy a day before that gave you a 30-minute divergence with that 2 hour move. So Oxy is not looking bad. When does that earnings come out? Tuesday? Tuesday. So this is a golden setup. It's going into earnings, so a little bit of risk there, 50-50 flip. But when you see the golden setup, it plays out more times than not, right? Apple, once again, was the last one that we did that with. And so it means Oxy can maybe find a base here. Doesn't mean it has to. Earnings is a 50-50 flip still. I'll always say that. I will never not say it's a 50-50 flip. It's just when the golden setup's there, the risk to reward starts to look a little bit better, right? The momentum starts to look a little bit better. All right, so today we reacted directly up towards that daily expected move. And right as the SPY hits that daily expected move, the Qs start to see a little bit of resistance. Yeah, Jose, hopefully that's helpful. It's a golden setup for, I mean, and that's in the course, but overall it's just like when you're seeing very good signals on tons of time frames, and you're seeing all of them right now, so that's like huge. If you want to learn about the golden setup, that course is down there. It's 90% off in November, guys. It's going away at the end, but just look into it, see if it's right for you. You know, if you're new, stick around for a little while. Make sure that this style, this kind of more position style, not really day trading, is something you're interested in. Really just trying to figure out which way the next decent sized move is coming. That's really what we're doing here. And you notice, like, it really helps us out. Really helps us out. Oh yeah, sorry, Ken Susi. Let's go look at that. You've asked a few times and you've been very patient with it, so I do appreciate that. It's there's just a lot going on today, so I do appreciate that. Something I would really like here from this stock, 31.50, decent price there. So something I would really like is to back off more. Because you've really got the structure to do it at that point. If you do that, you have the structure to do it. You get the retest of the 5, you curl up into positive territory. That would be a sign that you're going to see an extension of this 2-hour move. Now, the opposite side of that would be if that's too deep and this 2-hour does cross, you can test the logo, make a new one. So make sure with these, you need, hey, that 30-minute to confirm. That's going to be huge. That 30-minute has to confirm, and then you have a good shot of seeing this thing turn up. And as the 2-hour pulled down for quite some time, what does the daily pullback look like? Yeah, so you might be catching a daily swing trade. You just know a little bit more about structure. So you could say, am I going to jump into this right now? Or, even though I know the swing trade is there, right? This is using, Ken, this is using the skill of both courses at the same time, and I love that you're bringing it up. So I'm glad you brought it up multiple times, and thank you for being very polite about it. This is using both. You go, is this a good opportunity right now at this second? Well, the shorter time frames, the bigger time frames say swing trade to the upside is starting to prove itself. But when you take the technical analysis, the using technical indicators course, you can go, okay, but is this a good opportunity on the shorter time frames, right? And then you see a pullback. It might mean, hey, yeah, that daily's taken over. Maybe I take a small position here. And if that turns down, I can manage the trade, see if that turns down and turn back up, right? I can try, just in case that move comes, I can try, lose a 5-10%, come down like this, then apply the bigger position, right? Because if this does cross, you still want to treat it like, hey, that could fall through the floor. I don't think it will. Doesn't look like it. It's pretty high up into positive territory. The positioning of the MACD looks pretty good. I'm just saying you're pretty overbought still, and you could turn down first to create great structure. And I think that would be fantastic. And that doesn't have to stop even with this, right? If you came down even, you would fill a gap, which is kind of great. So I think if a 30-minute turns down here and a 30-minute turns back up, you are definitely seeing a good swing trade. I think this will be a decent swing trade if that all takes place. Good structure. You got the beat. You got the downturn here. You took back the 200. You're reacting back down towards it. You're seeing that turn up. Doesn't look bad to me. No 30-minute divergence, really. Actually, you do have a divergence here. It's not on the MACD, it's on the RSI. So it's not on the MACD and RSI at the same time. And you notice how lackluster that move was. One reaction, lackluster, and then it just takes over. That's great. As you go positive, that's great. All of this is good. This is great MACD behavior, even though it looks wonky. It is great behavior here as you go positive, right, on This bar, you go positive. 2 bars later, you're going up. That's great. And you're reacting right up to resistance. If you can pull down, this might be a good opportunity if that confirms up again. That could be the beginning of a daily swing trade, and you're catching it using the technical analysis course, the using technical indicators. That's awesome. I like the look. If it does what I'm talking about, I really like the look. Like, this is one that I would even maybe take a swing trade on. Like, I'm thinking about it. All right, we did close. Okay, so we're just going to break this down real quick. This is a major upward move, guys. You know, we talk about the major signals, the big signals, the weekly signals. Those are still there, just so you're aware. This is going to be our little breakdown. I won't have time to do a full breakdown video tonight. The signals are still here. So we have to be aware that these are still here. But as the Qs have come above that level, I think we're more into a correction style thinking. And I think 2025 starts to come into consideration. It seems like we bought ourselves some time here with this upward move. That's great. Okay, now the 30-minute, just to start off, if the 30-minute wanted to, and we will give out the daily expected moves on Patreon for every stock that we cover. So join that Patreon tonight if you want daily expected moves for tomorrow. We've seen some great reactions to them. We touched on one right here today. And but let's look at this 30-minute. 30-minute is showing some squeezing behavior. If we do get that profit taking in the morning, right, we know that the volatility does have the SPY has an 85% chance for a down day in the next trading session tomorrow. But that doesn't mean it has to be some kind of rug pull. It can be, but it doesn't mean it has to be. Okay? We don't necessarily have reversal signals here, so we should expect this to continue as the trend is very positive. So we're going to look at those daily expected moves tomorrow. And maybe the daily expected move is down here and we see some pop at the end of the day. Right? Or we just come down into that throughout the entire day. We'll see. This can just continue, but what we want to see is good reversal signals, right? This would be the first inclination. And then you would say, oh, that's a divergence at the monthly expected move. You're correct. There's a lot of the month to go, and you really want a 2-hour divergence to confirm a daily chart to go down, to really start these weeklies turning down. So what could end up happening here is that 30-minute pulls down, curls back up, then we see the 2-hour actually fall down, then we curl back up again and we make the reversal signal. That's what I'm really going to be looking for by the end of the month. Yeah, this is great because this is literally what I'm going to be looking for now. And you see my mindset now is not try to take some big bearish play yet. Mine is look for the opportunities, maybe be patient if I'm waiting for that play, but wait for something to set up. Right now, I'm mainly talking about patience. This is going to take some time. And then when that 2-hour does maybe go up to this level and turn down, well, I can be patient, see if that 2-hour turns back up, and I might have that swing trade, right? And then I can see this, and then I'll see this, and then I can take profit, and then I can see a divergence. That's how these things really do fall, right? We're still behaving like a bear market over with volatility. So that's something I'd pay attention to. The Qs, similar story. The only thing that we have to say about the Qs here is we're going to give you updated daily expected moves for the SPY and the Qs in the morning. And, well, if the SPY has a 85% chance to see a down day in the next 2 trading sessions, most of the time the Qs will follow. If you want to look at volatility for the Qs, you can type VXN. VXN. I do most of my analysis just with the VIX. I used to use VXN, but VIX itself just has proven to be better for me. So one thing to notice here is we did take out this high. What did I say if we take out this high? Well, I'm going to lean towards a corrective move, more of a corrective move. And so that's why I'm going to look for those reversal signals. Okay, that's why I'm going to look for those. But that's just something I wanted to point out for the Qs. And that's mainly all. I mean, it's the same kind of take for the Qs as the SPY. Look at this 2-hour move. It got rid of all those divergences. So you've bought yourself some time. We need to wait and see if we're just going to drop. If we're just going to go up and then drop dramatically, you're going to see weeklies cross down. You're going to have that confirmation on bigger time frames. But what we're looking for is the opportunity to get in while momentum is telling us that it's weakening. And so if this just shoots up and continues to go up and then we dip down and then we curl up again and we make that reversal outside of the monthly, that's what we're really looking for. We're looking for the same things we saw here before this drop. We're looking for in these areas. all right? And we'll notify you about them on Patreon. Apple, hopefully you guys enjoyed the update video on Patreon this week. Hopefully you enjoyed the Patreon video of this week. We do, I am going to start trying to do those the best I can, right? They go away at times just because I am a pretty busy guy, but I'm going to really try to put it in my schedule and be like, I'm going to do this every single week. I'm going to do this. So even if it's only 5 minutes to show you a couple of charts that look good, I want to do it. And those have the weekly moves on there because that's what you get on the Patreon. So we might as well talk about those weekly moves. So for this here, Apple, one thing you got to be worried about is that 2-hour rolling down. That's one thing. If the 2-hour rolls down and makes a divergence, that's a whole different thing. But this all could be a big cup and handle in some way, okay? So the 30-minute is something that you really want to hold up. If you don't want that 2-hour to confirm down in negative territory, then you need this to hold up. And this is where you're talking about the Qs potentially having a down day. Look where Apple reacted. This is great to react to that level and then get that pullback. You're reacting to a great level where a little bit of consolidation can go a long way. A little bit of consolidation here can give you enough gas to go up towards something like 232 to 233. So that's something key. Very, very key there. Tesla, this is one we're watching for some, if more weakness is going to come in, okay? If the 2-hour is going to cross. A lot of these moves in individual stocks are getting taken out already of weekly and monthly expected moves. We'll get updated weekly expected moves next week. So if we land outside of these areas, yeah, we'll get those new weekly, but the monthly expected moves, we got to pay attention to those for another 3.5 weeks. Tesla's making a reversal signal outside of a monthly expected move. So if we're going to experience a dramatic drop, this is what is going to confirm and not be able to turn back up. That's going to be something very important. Hear it again, not able to turn back up. Because if this 2-hour is like this, and we're outside of a weekly right now, we're going to drop back into that on Friday, and then this crosses, and you go, oh, this can be really, really bad, but then that just turns up into positive territory. You just bought yourself some time. And I think Tesla has a good opportunity to set up a triple divergence here. I'm just going to say that right now. But if this 2-hour means anything, this is what can hint that a big drop is coming. If it starts to curl down on the daily, watch Tesla. That's what I would say. Amazon, this one's going to be an outlier right now because look at that move. Look at that move. It is massive. What you're hoping for here is a reversal signal pops up eventually. Okay, you do have bad signals across a lot of stocks. You're getting rid of them on Amazon a little bit on the daily scale. You see we're getting rid of that, the bad look. So this means it can take place for quite some time. But when you pull out to the weekly, you're going, oh, it's still there. Okay, it's still there. So the potential for weakness is here. It's just we might take some time. This is January, right, for earnings. So if we're going to look forward to anything, we could look forward to January. I mean, that's when Trump's going to get in. That's where he's going to make some changes. That's where everything might begin. So something key to understand with Amazon is outside of a monthly, outside of a weekly. Let me double check that just to make sure I'm not lying to you guys. Yeah, outside of a monthly, outside of a weekly right now. Do we have the reversal signal we're looking for outside of that monthly yet? No. What did NVIDIA do? NVIDIA went outside last month. How we caught the big down day for NVIDIA was on October 31st was it made the divergence outside of the monthly expected move. That's what we're looking for again from something like Amazon. We're looking for Amazon to dip down, go back up, and then really trap some people like this. That would give you this look. And you'd see that pointing down, you'd see the price action pointing up, and you would say, ooh, that's showing me weakness. The only one really showing that right now that we've looked at is Tesla. NVIDIA, and here's that trade setup. You see it? Boom, that's what you're looking for. Monthly expected move was here. We did this, we came down. We did this, we came down, we used it as support, and boom, to the upside. Right? It was pretty much right there, and you see divergence. We failed the curl up, 30-minute divergence right here, said go, go, go. We're going to end up back in that move. We did that week. We reacted to the weekly expected move. So both coming into play on this trade, saying, hey, this is where I can bounce, and it bounced. Curled up, remained curled up, and went positive. Good stuff. But you notice we're starting to violate some of those divergence points. So this does have the opportunity, as it is, NVIDIA actually does have room to get to a monthly expected move. So NVIDIA could hit 160 this month and it would make sense, right? 160-ish. And so what we want to pay attention to is by the time we get to 160, are we forming that reversal signal? That's going to be something interesting there. But do I think there's more upside? I think taking an upside play, a little bit risky. I just want to wait for a pullback at this point for NVIDIA. AMD was one that really looked awful. And here's the thing about AMD. It just looks awful because the monthly turned down. So if AMD's hinting anything, it's saying this downturn is here. It's here, but it's on the monthly scale, so it could be right around the corner, okay? So this is really bullish right now for everything, but AMD, is it overall bullish right now? Not necessarily, but we are getting that reaction to where we want, right? If you were paying attention, we were talking about this making that cup up towards the top of our zone, and then getting that small handle, maybe retesting this, which we rode a little bit, right? We retest that area. So that trend line could come into consideration. We see that cup and handle. This ends up going back up towards 160.83. Maybe it goes a little higher. Maybe it goes to 160.89 or 58, 169.58, right? So we just want to see this make good structure. The 2 hours not overbought. If that crosses down, bad things, right? Look for divergence at that point in our zone. But the 30-minute here can just curl down and curl back up, and that would give you your handle, right? That would give you your handle. So that's what I'd be looking at for AMD. Meta, great move, no 30-minute divergence. So even a 30-minute pullback, if that comes, hey, watch if that turns back up. Getting that consolidation at this level, right? It's not like I would say a perfect little cup and handle, but it is pretty close. And you're coming up to the gap fill. You're going to consolidate and break through if this remains bullish. You're just going to curl down to that center line and turn up into positive territory. Good stuff there. Awesome. Let's just take a peek at the 2 hour and you're noticing, hey, that's pointing straight up. That's pointing straight up. So that's very, very good. So when this becomes bearish is if that 2 hour crosses and we start to lose all these moving averages, the 2 hour crosses. So you want that 30-minute to cross down, but not curl down the 2 hour, because then it starts to become riskier for downside. Microsoft gave us a great hint. Anyone that comes in and, you know, they obviously don't pay attention to the videos because Microsoft was one that we were just mentioning. Hey, there's great divergence here. If you're part of the Patreon, we talked about the fact that Microsoft has divergence here. Watch for a reaction to the topside zone. Watch for a reaction to a weekly expected move, all those type of things. And this can turn up 2 hour charts. The 2 hour chart did turn up. You didn't have basing out down here. So if you reject now and it's strong, I'd watch if that 2 hour crosses. But right now, I think as you're at a weekly expected move, just a little bit above it, you're seeing a little 15-minute divergence probably pop up. You can see that on the RSI. That's how I cheat a little bit without changing time frames. What you really want to see here is this to consolidate on a Friday. You really do. And then maybe see that curl up at the end of the day, right? It can consolidate in the morning, turn up by the end of the day, still remain in those weekly expected moves. And then you've geared up to maybe break through this zone, retest it, and end up heading higher. Let's look at Google. We're kind of popping through a bunch. Google's outside of a weekly expected move, reacting to a great level, and it's going to be similar, right? You notice when all these things look similar, that's when you really can say, okay, if I start to see these things adding up on one stock, maybe another one will show me it, maybe another one, and you start to go, okay, this is adding credibility to a bullish trade at this point. If this can turn down on the 30-minute and give you that opportunity, react back down to the 5, maybe get a retest as this staggers up, and then you see that curl up into positive territory. That would be a good sign for positivity from Google. One thing to be aware of, though, is the 2 hour. You're starting to make a little divergence here. Okay, so once again, Google not safe from the bear case here. The bear case is the 2 hour turns down. That 30-minute is too much. That 2 hour turns down and it's not able to turn back up. Still relatively positive on this one, so you got to say it does not turn back up. If that starts to go negative, you don't see any little 30-minute basing out, right? We don't see a little bit of this going on. That's when you start to get a little worried when that 2 hours crossed over, okay? So if the 2 hour crosses down, that would lead more arguments for the bear side there. AMC, we did talk about this one a little bit. Now AMC, we just, you know, this is something you can easily understand once you think about it a little bit. If you believe that markets are hunky-dory and no one out there knows something you don't, and no one out there has more power over these stocks, no one out there can set a price for a stock, manipulate stocks. AMC, fantastic freaking earnings. Literally just great. That is great. Okay. I'll look into it further tonight to make sure it's great, why this sell-off is overall happening. But the only information I'm getting right now are little hit pieces that say like, you know, oh, this meme stock is losing its value. Okay. Some good numbers to lose value on. But we were paying attention to this. We were looking, can this 2-hour turn down? It did turn down, and that tells us we need to watch out in case the daily turns down here. It's right by the center line. Notice how in technicals these things happen a lot. You'll see them more and more as you do this for years, where you'll see this MACD get really close to that center line, want to go positive, and then it shuts down. It starts to make divergences. It shuts it down before it can get that positive trend. That's when the algorithm can kick in. If this would have done this today, that algorithm can kick in and you can really go positive on that MACD. But notice it cuts it short, turns back down. If this would cross, then the likelihood that we take out this low and go make a new one is high. Okay, what we're going to pay attention to is if we see basing out, if we see a little 2-hour base out signal in here, and that shows us something, and then we also see a divergence across for the daily, that's what I'm going to be paying attention to for AMC. That is when I will be taking a little bit bigger play. I'm not going to take too much ever on AMC, because if a big moment happens, you can make plenty of money. I'm not trying to do too much there. GameStop can go through a similar thing. Does GameStop have reversal signals for this daily to cross down? Yes, it is positive. It's still more positive than AMC on the daily scale, but it does have reversal signals, so I got to be aware that this daily can cross down, maybe to go retest 20. Okay, the reason I have to be aware this can cross down is because, yes, we are flagging, and it looks like it's holding, and the cup and handle is probably there. I mean, not really flagging. Cup and handle on the 30-minute is probably there. We can look at it in a sec, but if this 2-hour just crosses, and we're going into Friday, by the way, what do I always say going into Fridays for GameStop? I shouldn't expect this to go up on a Friday. They want this to close at lower prices every single Friday. So if this crosses down, I should expect negativity. If that does not hold in positive territory and goes negative, then the daily can start to cross. So if this 30-minute does not cross up and see a good move and hold that move, that's going to be a big problem. If this is not some kind of consolidation to head higher and that 2-hour drops, I should not expect positivity from GameStop. All right, we do give the expected moves for gold. One note about gold is the weekly expected move did almost just barely, I think it was like just barely off from that weekly expected move. Let's see here. Yes, you were off of the weekly expected move by 50 cents. So that's why I say I don't make up these numbers. Use the options data. Something with data behind it will always help you more than just if you ask me where support is and I'm going to say, well, there could be something here, right? There could be something in here. They're usually going to line up. And you notice that the weekly expected move, where does it line up to? Right where you could, argue just based on price action, there's support. Okay, so that's why we use those. Do you have reversal signals here? No. So something to pay attention to maybe going on into next week, because gold had higher implied volatility this week, is you're probably going to get a little smaller range. Maybe we'll see that go down, cross through a weekly expected move, and a tradable setup here maybe for gold, for GLD. So that's what I'd be looking for on the 30-minute. If we're going to see more positivity come in, then we're going to be able to take back that 5. We're going to be able to curl up this 2-hour and go positive. That's going to be key as well. As far as volatility goes, just remember 85% chance for an up day or for a down day in the SPY, an up day in the volatility tomorrow. That does not have to be a full-on reversal. It can, but we could just see some profit taking at the end of the week. We're outside of a weekly expected move and we're heading into close. People could like that profit. It easily could continue. So 2 things. The 2-hour does have a good chance to turn up. You're seeing divergence on the rejection divergence on the 30-minute, and that's something to pay attention to, but that could just be a turn up that turns back down, and then we can look for if we set up a 2-hour divergence on volatility and a 2-hour divergence in the opposite direction on the SPY at the same time. That's going to be key, because if we do not see those things confirm, if we do not see those 2-hour divergences confirm, then this daily scale has crossed, and this is where you have potential for squeezes down to 12.12. All right, so if we're not going to see volatility, I'm more leaning towards this. Okay, but we'll see. This is turned down. I know this can go to 12.12. Am I buying volatility on the potential for it to bounce up on Friday and the potential for SPY to pull back on Friday, tomorrow? No. No, I'm not going to. I'm not going to do that. No, I want to see a good reversal signal. I want to find the reversal signal that has potential to be a massive reversal signal, some kind of corrective move at this point. That's what I want to find. Then once I see divergence in the opposite direction, I can take profit and say, there's the end of the correction. We most likely will head higher than here. I will manage my trade. So that's what I'm paying attention to. We just have to always pay attention to volatility as we are behaving like a bear market, as we have the crash signal flashing red for a long time. This is the longest time I've seen it. I haven't seen it too often, right? I'm relatively young, so I haven't seen it too often. But this is the longest time I've ever seen volatility hold a crash signal. Usually if you're going to get some kind of bullish move, you'll see the 50 cross the 200 and curl right back down. Right? We've talked about that on this channel in the past. Right here. Right here, we talked about it. It was trying to cross, failed, and we said squeeze. Trying to cross, failed, little squeeze. Trying to cross, reversal signals. Right? Daily divergence popped up. Daily divergence popped up, squeeze. Notice the 50 did not cross the 200. That's what normally happens. This is different, okay? I'm not Jerome Powell, or I'm not the mainstream media saying this is different this time and lying to you. This is different, and you can see how it's different from those times where we've called short squeezes, but we're still calling possible short squeeze here. We're just aware that if this sets up, then that squeeze might be over relatively quickly. All right, guys, thank you so much for joining today. Thank you for leaving a like on this video. Please leave a like, and in the comments, if you could, just make sure to spam a little bit that that there's a breakdown at the end of this video so more people can see it. We will put out the daily expected moves on Patreon for you tonight for all the stocks that we do put out on Patreon. And then we will also be live tomorrow morning to get you guys if you're not a part of the Patreon, we still will give you the daily expected moves for the SPY and the Qs. Okay, we'll give you those daily expected moves for the SPY and the Qs tomorrow morning during the live show. So thank you guys so much for joining today. Really do appreciate it. A lot of good questions out there. A couple of questions about the course. That's awesome. If you want to get those, awesome. If you're new, stick around for a little bit. Watch some of these videos. Make sure it's a good fit for you. It's a fun market. You can't lie. This is a very interesting market. We're seeing the signals pop up, and that's the important part. The market is popping up the signals for us. The reason that we were still saying at least retest before we saw that crazy upward move was there's still a divergence here, guys. And this is a good life lesson here for if you want to trade. Pay attention to every single time you see a 30-minute divergence and you're taking a play that the divergence could really hurt you. Pay attention. Let it really dictate how you react. And that's the important part about learning. You're learning how to find signals in order to react. You're not learning how to find signals that could potentially cross. You're looking for the signals that confirm and say, this can hurt my trade. You're looking for the signal that's outside of a weekly or monthly expected move that says, this is saying that momentum is dying here. We have a big event coming up. If that event's bad, this can turn down. If it curls back up, I know how I'm going to get screwed, right? So that's what really we're going through, and that's how I want you to really look into if you're going to take that course. Really have that mentality of, I'm doing this to learn how to react to the price action that I'm seeing in front of me and how many things I can come up with for reasons to take a trade. So thank you guys for being here. Thank you for liking, subscribing, join Patreon, take the course. You guys are fantastic. I look forward to streaming with you guys tomorrow. I'll see you later on Patreon to give you guys those daily expected moves. But for now, peace out. Later.